Hey everyone, welcome back to another edition of Outdoor Hospitality Weekly. I'm Alex Burkett, joined as always with my partner in crime, Matt Whittemore. Today we've got another great interview episode. We're bringing on Landan Dory, founder of North Star Brokerage and Advisory. Landan is a broker in this space, knows RV parks, campgrounds, and outdoor hospitality better than a lot of folks, and we're excited to dive in and talk with him about what he's seeing in the markets, both on the buy and sell side, trends and insights in the industry, and just dive into a little bit of his wealth of knowledge. So, Landon, thank you so much for taking some time to join us today.
Yeah, thank you guys. I'm excited to be here. I'm looking forward to seeing where this conversation goes. It should be a good one.
As we get rolling, why don't you just give listeners a little bit of background if they are not familiar with you? How did you get into the campground brokerage business?
It's a good question. I've been a broker. I've been in real estate since 2015. I've been a broker, sorry, I should say an agent, not a broker, since 2017. For years, I focused on selling in institutional retail, single tenant net lease properties all across the country. I think the last tally before I switched gears was $250 million worth of real estate, 21 states, probably 150 plus transactions. The type of stuff that everybody's familiar with, your Starbucks, Dollar Generals, CVS, Walgreens, things like that. And what I noticed was after a while, a lot of the people that were buying the types of properties that I were selling were typically retirees who, say, had sold a 25 unit multifamily property in California at a 3 cap. And they were doing a 1031 exchange because they were about to take a 40% tax hit. They were also about to lose all their income, so they were buying our properties, which are typically come with a 15 to 20-year absolute triple net corporate grade lease. So mailbox money in their golden years is what they were seeking out. And I thought, this is interesting. I really like doing the 1031 exchange work. I really like doing buyer representation and helping people make good decisions, because there's plenty of people that were making bad decisions on either stuff that I was selling or on other stuff I was watching trade in the marketplace. And so I started seeking out those types of brokers. I started talking to multifamily brokers. I started talking to land brokers, industrial brokers, and my pitch was pretty simple. It was, hey, if you've got that guy in your market who you want to sell their property, they've owned it for 20 plus years, they're 65 years and up, they're thinking about retirement, whether or not they say it. And if I can partner with you in a pitch, we can go to them and say, look, we've got your multifamily expert right here who's going to help you sell your property. We've got your single tenant net lease expert here who's going to help you on your up leg and get you into a solid exchange. It's not going to cost you any more than if you were going to do it with somebody else, because everything is already spoken for fee-wise, and it's a lot better service. So did a lot of that. I think to date, we're somewhere between 40 and 50 1031 exchanges across the country. Dollar sizes ranging anywhere from $1 million to the last one's undisclosed, but upwards of $40 million for an exchange.
Wow.
And I thought, man, this is really fun. I like doing this a lot. What are the other brokers I can talk to? Who else is doing this? And there's this wonderful little graph. I'll find it and send it to you guys if you want to add it to the notes or anything. But it shows a 10-year timeline of the CPPI, the Commercial Property Price Index, over a 10-year period. And it does what you'd expect, right? It breaks the asset classes down to individual lines. Retail goes up and to the right, it appreciates over time. Multifamily goes up and to the right a little bit more. Industrial, did really well over the last decade, so it's pretty high up there. But the one asset class that was right on top was RV and mobile home parks. And I thought, that's pretty interesting. So I double click on that, and I realized that the vast majority, I think 75% of those types of properties at the time, were owned by individual investors, just mom and pops, a lot of them who have owned them for quite some time. And as you guys know better than anybody, these are not passive investments, these are jobs. It's tenants, toilets, trash to the nth degree. So I started looking for the brokers. I said, who's doing these deals all across the country? And of course, I know who they are now, and we probably all know some of the common names, but there's just not that many of them. And there's really not that many of them that by my standards, I thought were very good. Just whether it was based on the conversations that we were having or based on the way that they conduct their businesses, I thought, man, you guys are selling a lot of parks, but you don't have a lot of competition. There's no one really keeping you honest. I mean, I was competing against, I'd say, probably 30 people just inside the state of Texas doing net lease stuff, and 100 plus nationwide. in the RV park space, just in Texas, there's like two other groups that are worth their salt. And then nationwide, you kind of extrapolate that out. There's still not very many. So I didn't have any success bringing these guys into my pitch and getting them into where we could work together and doing some of these transactions. So I thought, well, how hard could this be? So I hired a couple guys who had a little bit of brokerage experience. We were going to learn to sell RV parks from the ground up, figure out how it all works. Got spoiled on our first deal. We were contract to close. We were actually rep agreement to close in under 30 days, and we just thought that we just thought we'd found the gravy train. So we put a lot of resources behind this, and over the last 3 years, we focused almost exclusively on this. Done some wonderful deals, mostly in Texas. We crossed state lines a couple times, but not a ton. But the pitch has expanded. It was just, hey, we're looking to do the 1031 exchange. Help us, here, look at this case study. We can do this for you type of a deal, to where we realized, hey, we could actually just sell these parks and do a lot better than what a lot of the people are already doing, or give you a different option. If your only option is you take a call from a private investor, or you have to deal with a wholesaler, or you deal with some local residential agent who has no idea what they're doing as far as parks go. So we've established ourselves pretty well in the Texas market. We've made a lot of really good connections, a lot of friends. Obviously, it's a wonderful space filled with wonderful people. And we still have the goal to sink our roots a little bit deeper in the Texas market, grow the team, establish a really strong foothold here in Texas. And we're fortunate in that, because most people who want to buy parks right now, if they're crossing state lines, they want to be in Texas. So we really want to sink our roots in deep there. And then, yeah, long-term 5-10 year goal, we want to be across state lines, maybe a couple different offices, and but that's a little bit further down the road. Let's take it one step at a time.
Love it. I'm so intrigued to dig in on a few different areas. First, I would love for you to educate us on what the Texas market looks like. There's obviously tons of RV parks in Texas. There's tons of all different types of RV parks in Texas. Alex and I both live in New York. We have a ton of experience operating in New York in the Northeast, and it's just a different world. And it's so funny, you talk to people in Texas who would say, I would never invest in New York. That's crazy talk. Like, you're setting your money on fire, and like, they might be right. But I look at Texas, I look at the Southwest, friendly business climates, friendly development climates, and that makes me nervous. I think I picture myself buying a park in Texas or Arizona or New Mexico or wherever, and then I imagine somebody buying the plot next to me and just building another RV park. Is that tell me where I'm wrong. Tell me what I'm missing there.
No, you're hitting the nail on the head, and I can give you some data to back that up. And I can actually, we've got a pretty robust system. We do a quarterly Google Maps scrape. We found some guy in India who can do like a Python coding thing and scrape all the RV mobile home parks in wherever we want to. So in Texas, we're tracking just over 3,800 parks, and I won't say a vast majority of those, but there's a Horizon port that I'll reference that came out in 2018 that was doing a similar survey of different states, not all the states, but maybe like 10 or 15 states. Texas was of course on the list. And the number of parks that they were tracking in 2018 was 2,100 parks. And like I just said, my internal system alone is tracking over 3,800 parks. That's an 80% increase in the number of parks that are on the ground. Our system also tracks build dates, expansion dates when we've got that data as well, transaction dates, so we can see when these things are being put on the ground for the first time, and then when they trade hands. And that data is super consistent with what we're seeing. So a lot of these parks, the trend I think that we've seen is probably the same trend that you guys have seen, that a lot of interest was being given to this market in the late 2010s. Obviously, COVID hits. People start traveling, revenues for these parks go through the roof, so everyone's performing well, everybody's a genius. At the same time, it's a ZIRP era, so everybody's getting, like the last guy I just talked to had a 3.85 interest rate on his KOA. He's not really interested in selling now, because if he did, he'd probably be selling to someone who'd be buying at a 7.5-8% interest rate. So the 2000 to 2022, say first half of 2022, was just gravy. Everybody was a genius, everybody was doing well. Then COVID goes away, work from home starts to trickle and die off. Revenues at parks simultaneously start going down while interest rates are going up. So the people who bought at low interest rates, low cap rates, high prices in that 2.5 year period are now staring down the barrel of what's going to be an imminent refinance on their debt. Same goes if people were building based off of those same metrics, because I've seen a lot of these pro formas. I've seen a lot of pitch decks. I was just looking over a CBRE appraisal for a new development just south of Dallas, and the numbers couldn't be further from that now. They're just wildly off because the market is somewhat normalized. So speaking to the Texas market as a whole, Texas market's good. Anything within the Texas Triangle, which is the corridor from Dallas-Fort Worth down Interstate 35 to San Antonio, take I-10 across to Houston, then 45 back up to DFW. We call that the Texas Triangle or the Golden Triangle. Anything in there, it's really tough to make a bad long-term investment decision. But to your point, that's not to say that there's a lot of land out here. Someone can just literally build right next door to you, double your lots, give nicer amenities, do it at a cheaper cost, bleed you out on their rental rates. We see all of this happening right now live in real time. It's problematic. I will say, though, for better or for worse, a lot of the municipalities, counties, the local groups are doing what they can to restrict this. Sorry, hold on a second. Can you guys hear me?
Yep.
Yep,
Okay, so
go for it.
when my phone rings, I'm not sure if this... what was I saying? The municipalities, they're putting a lot of things into effect to try to curtail a lot of this development, whether that's subdivision standards for these new developments, whether it's higher water capacity, higher sewage capacity, flat out moratoriums we've seen in certain municipalities here. All that which changes the landscape as an investor can either make a market more appealing or less appealing. Do we have it all pinned down? No, because Texas has 254 counties alone. We can't track all of them as well as we can track one of them.
Wow.
That's a lot of stuff to track. That's a lot of different legislative bodies. Yeah. That's a lot of different regulations, a lot of different attractions, right? We've got people that want to come down for the coast. We've got winter Texans. We've got the year-round folks. We've got people that are there on a 5 to 10 year infrastructure project. So trying to put everything into a box is the way that my brain wants to work. In my mind, everything should be able to go into a spreadsheet and we should be able to figure it out, but that's just not the way it works. So we're learning every single day.
Love it. Another outsider question for you about the Texas market. So you're tracking 3,800 parks. You're seeing a lot of transactions. How does it break down between true outdoor hospitality and like transient or affordable housing, if you had to put a percentage on it?
That is a good question. I wish I had an answer. I wish I'd looked this up ahead of time because I could probably get you some data from our CRM. The short answer is I think it's going to be a little bit more pocketed because there are any coastal area or near any river or lake and body of water, there's going to be a lot more transient type rentership there than if you're inside of a major metro or even further outside of a major metro where it is an actual low cost of living. To quantify that though, man, it'd be so tough to say because it would be different in every single market.
Interesting. Yeah, that makes sense. The reason I ask is, a deal in Texas will cross my desk every so often, and for whatever reason, I feel like I'm seeing more of the kind of affordable housing type RV parks. Do you find that there's more appetite from investors for those types of deals versus hospitality? How does that look in terms of where the money's flowing? I think we lost you. Nope.
How about now?
Gotcha.
There we go.
Okay, sorry. Every time my phone rings, I put it on airplane mode. So from the investor side, what's interesting about that is it's a mixed bag, right? the best example I heard was you guys are probably familiar with Baker. He's on X, but
Yeah.
he put out a tweet. He's a wild cat for sure. But he put out a tweet that said, "I've gone to the same coaching things, mastermind meetups in this space as everybody else has. Everybody says stay away from septic, stay away from well, and especially stay away from wastewater treatment plants. Go for municipal utilities whenever you can." And everyone says, okay, that makes sense. We'll all do that. So that's what everybody does. But then there's the contrarian opinion, the person that says, well, no one's chasing deals with the wastewater treatment plant. That's the exact type of deal I'm going to go at, and I'm going to clip a 2x return over what these other guys are on an annual basis. So as far as what buyers are looking for, it's very mixed. But what I could say for the there's a clear bifurcation, or there's a better analysis, at least from what I've seen, on where the renters are going. Because, right, you go from 2,100 parks to 3,800 parks. There's no way that we have that many RVs on the ground today versus 7 years ago.
Right.
It's just not keeping up with pace. Everybody I talk to will agree with that. But there's a clear bifurcation of where the renters are going. So that's what seems to be influencing the investor decisions more than anything else. You've got, obviously, a lot of different options for RV parks people could stay at. Everybody's has gotten affected by the last couple of years in some way, shape, or form. The two areas where I've seen the least impact are like the really nice, highly amenitized Class A parks, and then the full other side of that spectrum where it's every bit of a fixed income, low income type of park where, if somebody has the option to save $30 by going to the park down the road versus the park they're staying at, now they're going to move down the road because it's as easy as moving the truck and moving your rig down the road. They're very price sensitive. On the other end of that, if somebody's got disposable income, right? They're a traveling nurse or traveling doctor, or they're just somebody who likes the nomadic lifestyle. They want the bells and whistles. They want the pool. They want the splash pad. They want the covered spaces. They want the clubhouse with the fireplace that's burning year round, right? Those people aren't price sensitive. They can go in that direction. But everybody in the middle of those seems to be fighting the same fights, having the same challenges, and looking for the same answers, and looking in a lot of the right places. But the crux of it is, how do we get more renters in here, and how do we keep our expenses low at the same time? So is it a question about marketing? Is it a question about how do we improve our operations? Is it a question about we need to really spend time to try to get our fixed or operating expenses down, which is really tough to do? So I'd say most of what I've seen on the not really institutional side, let's just say sophisticated professional investors, people who are active, they're looking for the nice quality stuff that they could eventually package together with 10 other parks and roll up to an institutional group. Or they're looking for the exact opposite. They're trying to find something with a competitive moat on the lower end, maybe a moratorium in place, maybe it just happens to be the closest park with a very low basis near the infrastructure project or the nuclear power plant, the wind farm, the solar farm, the refinery, whatever it may be. The guys in the middle are scratching their heads trying to figure out how they're going to get through these next couple of years, and if they even want to.
Yeah, really interesting. I love this discussion. A lot of really smart points you're making. A couple more questions on the investment market. You noted, and I love this discussion about infrastructure, public utilities versus private. In our world in the Northeast, these are all campgrounds, mostly in very rural locations. You'll get a few beach towns that have like an infill RV park campground that's on public utilities. I would venture to guess that it's less than 1 or 2% of our total inventory. Maybe that's a little bit of a stretch, but definitely less than, like, I would be shocked if you told me 5% of campgrounds had public utilities. They're in mountain towns and, very rural locations, which is obviously different than a lot of the stuff in Texas. Do you have any grasp on what percentage of parks, and it can be round numbers or, ranges, but what have public utilities versus private?
I'm totally guessing here because it's not something I thought about that way. And just so you guys know, the way I'm thinking about it is, what's the most valuable park? What's the most sellable park?
Right.
And to me, it's either a really nice Class A new park or it's something that's dense infill. It's in a major metro. Major metro, I'd guess somewhere between a quarter to half of the parks
Okay.
are
Wow.
on municipal utilities. So pretty good
Yeah.
number. In your secondary markets, maybe it's like 10%, and in your tertiary markets, there's just no chance.
Right.
Everything is on
I was
private
going to say
utilities
Right.
out there.
that feels a little bit more like what
Yeah.
we're probably used to in the Midwest as well, right? I
Yeah.
think it's very very similar climate.
Yeah. And you brought up with the masterminds and everything, and that always just sounded so strange to me because from our lens of like, everyone is being taught to chase after less than 5% of the parks. You brought up a really great point about that leaves an overwhelming majority of the parks that because some gentleman told them don't buy that, they're just not even going to look at it. So super interesting. Could you give us some commentary on ranges of the market, price per site, cap rates, where are things trading in today's market?
Um, so I can speak for we closed 16 transactions in 2024. Um, Fortunately, 2 year to date. So I can look at the 2023 numbers and the 2024
Sure.
numbers for ourselves and then for the market because we track both. For ourselves, our lowest cap rate trade in 2024 was a 5.1% cap rate. Great property. It was basically in the heart of just south of downtown Austin. It's just a killer,
Wow.
iconic, institutional quality park, and it traded at a cap rate that nothing else trades at unless it's got a deep value add component or it's way under market in rents. Highest this last year, after it was all said and done and all the spitting and fighting at the closing table between the buyer and seller, probably somewhere around an 11% cap rate.
Wow.
Um,
Wow.
as far as a price per pad basis goes, lowest last year was on Lake Livingston. Yeah, it was on Lake Livingston. I think that traded at 12K a pad.
Okay.
Highest was north of 160, and
Wow.
that's that same one that I was telling you
Uh-huh.
about. That's in Austin. So price per pad rather has always been a really tough metric for us to try
Yeah.
to utilize because you could have two identical parks that were built by the same guy with the same layout and everything, but if this guy's a couple miles closer to the highway, he might demand an extra $100 a month in monthly rents, and then the same for weeklies and nightlies as well. So his books are going to look completely different. His cap rate's going to be, even if it's the same cap rate, his price is going to be different. And what could be a 65,000 a pad site somewhere in let's say south of Austin or west of I-35, that identical park somewhere else could be 80,000 a pad or it could be 40,000 a pad. The highest
Wow.
other price per pad trade we've seen in the last 12 months was a seller finance deal, one that I'm very familiar with, and it traded right at $100,000 pad. And this park, it's in Williamson County, so just north of where we are in Austin. And it's not an amenitized park. There's no clubhouse, there's no pool, there's no bells and whistles. It's
Wow.
got gravel roadways, gravel pads, no site covers. I mean, nothing special about this thing at all. But it traded $100,000 a pad.
Amazing.
That's crazy. I mean, the 160 plus is crazy, but that's just a different beast. But I'd say typically the historical average, if you're looking in a major metro, you're somewhere between 50 to 60 a pad for a good product. If you're in a secondary market, you're probably 40K range plus or minus 10K on either side, depending on what you've got. And if you're in a tertiary market, as low as 15,000 a pad on up to maybe 25,000 a pad if you've got something that's decent and stabilized. And we have
Interesting.
something too sorry, I don't mean to cut you off, but
No, go for it.
I scratch my head thinking about you guys' market as compared to mine because I know how different it is just being in Texas and what park numbers look like, what occupancy rates and all this stuff look like in Texas in different markets, and it's all varied. But we're a year-round state. We don't shut down because we have 3 feet of snow for half
Yeah.
the year. So it's very different than if I'm talking about your neck of the woods and you tell me if I'm wrong, but you guys are shut down half the year if you start looking at some of those parks you see trade in the Dakotas or in the Midwest. And I mean, unless they're a low income, long term park that those people are just braver than I would be, those things kind of shut down in the winter and nobody's there. Whereas we're open all year round. Matter of fact, some of our markets down here show their strongest months in Q4 and Q1 because that's when the winter Texans are going to come down to escape that type of climate, and they want to be in Texas where today it's probably, what's it say, 78 degrees right now in
Wow.
Texas, February 4th.
Yeah. It's gonna be like 7 degrees here tomorrow, so I'm jealous.
Yeah.
Yeah, I mean, you took it right where I wanted to take it. We're typically 6-month seasons in the Northeast, and I think in northern states in general. It's kind of long ago evolved into a full season renter dominant market, unless you're in like a really great tourist location where transient, there's the occupancy is going to be high, the ADRs are going to be high. But you look at a lot of parks, they might be 100% occupied by full season renters, or at least 50, 60, 70, 80%. And that's typically like a $3 to $4 to $8,000 seasonal rate. And maybe like a 50, 60, 70 high end park might be at $100 a night. So we have this downward pressure on revenue, and then conversely, or in turn, on price per pad. So when I see these types of transactions with 100,000+ per site, I scratch my head and I'm like, why wouldn't you just buy apartments? Right? Like I
Yeah,
can
honestly.
go buy a really nice apartment building for $150,000 a unit. And like, yeah, it's a different thesis. There's really compelling trends and macro stuff going on and a lot of good fundamentals. But the other part of this in the Northeast is that these are all very old parks for the most part.
Mm.
And the infrastructure is just crap.
Mm.
You have
Interesting.
above ground water lines, at least partly or fully. You don't have water systems you have to shut down the entire water system in the winter because it's not equipped to run in the winter.
Oh, wow.
We
So
also
we have
the elements impact a lot of this
oh
much
yes,
more critically when thinking about the infrastructure as well.
Sure.
right,
Not
Yeah.
only are we shut down, but our infrastructure shut down and it needs replaced way more often.
right. So it's a
Interesting.
trade-off. I mean, I have the comfort of I can be willing to bet that nobody's going to build RV parks in the towns that we're in because we're grandfathered in. There's no zoning for it. The town would never allow it. People don't know the difference between a mobile home park and a trailer park and an RV park. You probably would go in front of the town and say, "Oh, I'm building this beautiful camping resort," and they would say, "We don't want trailer parks in our town." And so we have the infrastructure problems. We have old parks. We have we don't have flat ground. We have rocky ground in the mountains that I'm looking at it on for a project right now where we have one of these seasonal water systems. We're gonna have to bury miles of water line in the ground. We are looking very hard at getting winter operations. It won't be for RVing, it'll be for park model cabins.
Uh,
But we're going to have to bury still probably a mile worth of water lines in very
Jeez.
rocky ground, 4 feet in the ground because that's where the frost line is. So that's going to be a hell of an
Wow.
excavation project.
Yeah.
Um,
I wouldn't even know how to start to underwrite something like that to find out if it's
Me
feasible.
neither. But yeah, so it's we see all types of transactions at that like 12,000 per site or 20,000 per site, or a resort, a high end resort might be at 40, 50, thousand per site, but that's way too rich for my blood. So it's fascinating to see the difference regionally. It's such a regional business. Um, it's fascinating. I've really enjoyed digging in with you. I feel like I've learned a lot about the Texas market.
I was going to say,
Alex,
can I jump in here, Matt, with a follow up
yeah,
on
yeah,
this? The question that I have as we just sort of talk through all of that and understand the price per site and where all this is trading at is who are the qualified buyers that have
Mm.
the funds to pay 100, 160, 50, 60, $70,000 per site. I know, Landon, you talked through sort of the more desirable types of properties that more
Mhm.
people are gravitating towards, but what's really the pool of folks in Texas that are looking at these things really seriously, and who is it that you guys are engaging with more frequently?
Yeah, it's a super good question. We break all of our buyers and owners down into one of three buckets. We just call them tiers 1, 2, and 3. Your tier ones are your institutional guys. That's your Sun Community, that's your ELS. If they're publicly traded, or if they're raising large amounts of money to do what they do,
Yeah.
they're a tier one. They're typically not touching anything unless it's doing $1 million revenue, maybe 150 plus sites, and those guys are not as active as I expected right now. I think they're waiting for the dust to settle. They're trying to manage a large portfolio through all these challenges that we're talking about. Your tier two guys are your syndicators, your professional investors, the types of people who make their money by doing real estate. They're either building a portfolio for themselves, they are maybe they're building it doing a roll-up strategy like we saw in the self-storage space, and which seems to be very common in the MH space. They're taking one park, trying to get 10, package these things together, operate them efficiently, then sell off to one of the big dogs. Those guys are pretty active right now. The syndicator pool seems to be drying up. A lot of syndications that were birthed in the COVID era are dying, and dying a very slow and painful wheezing death right now. Um,
Everybody
I've
came in for
seen
that fast money.
everybody came in for the fast money. If you were one of the syndicators taking fees, you probably did pretty well. But if you're an LP, sorry about you. So that seems to have been dried up a little bit. And then your tier threes would just be your mom and pops. Maybe it's the retiree who just they quit their job at Chevron. They've got their 401k. They want to do something. They want to own a park, which is an actual case study of someone that we worked with. Maybe it's someone who already owns a couple properties in the area, and this is just a nice add-on for them. In one instance, there's a small city outside of Austin where the buyer on one of our deals just happened to own a couple hundred acres around the city. He basically owned all of the non-operable city. He owned a lot of the dirt.
Wow.
And then when the RV park came up, he's like, oh, look, cash flow. I'll go buy that. And he bought it at a cap rate that nobody else was even going to touch it for, because he really wanted the dirt. He wanted to continue investing in this area. He's got a 20-year vision that's very different than somebody else's 1 year, IRR. So the buyer pool's mixed. Obviously, your seller financing guys and gals are still out in the market aggressively looking for deals. Not many people, in my experience, are really thrilled about a seller financing arrangement.
Right.
And then anybody else who's not using like institutional capital, large pools of their own money, are going to a bank, or they're going to bank plus SBA, and they're stretching themselves out to try to get to a purchase price that they can afford, while also hitting a return that they can actually, live off of and eat. So it's a very, very mixed bag.
Super interesting. We track the buyers in the market too. I'm curious if you have any figures you can share. I mean, we track kind of more the brand name, that they have a website that says, hey, we operate a portfolio of RV parks. I think we've got like 65 or so groups in that arena. Alex, is that kind of along the lines of what you're working with, Landon?
Yeah, so our CRM is pretty robust. I helped build the thing, and we've tried to put things in buckets. We're trying to put buyers in buckets. So what are they looking for on a per site basis? What are they looking for geographically? What are they looking for construction wise? And we've got these fields just in our CRM that are preset for this. Every single email that you'll see anybody in my company send out, there's a hyperlink on there with a buyer registration form. So anybody at any time can find one of our listings, can go to our website, can go to our email signature, and they can register themselves as a buyer, put their criteria in there. Today, we've probably got somewhere between 300 and 400 what I would call qualified buyers, either because they went through that effort, or it's somebody that we know within that database. So whenever we have an opportunity, whether it's an off-market opportunity, it's a listing we're about to bring even if it's somebody else's listing that we think is mispriced, or maybe it's just being mismanaged on the brokerage or the sales side, we'll just take that park, its attributes. Let's say it's a 75 space park just outside of Austin, Texas. Great. I'll go in the CRM. I'll filter by 51 to 100 space buyers who are looking in the Austin metro or just anywhere in Texas. And I can run that list, and that typically gets me anywhere between, well, it changes every time, but let's just say it gets me 40 to 50 buyers who've registered in our system and have expressed interest in being contacted about a park. We underwrite the park, we make some sense of it. We can send out one email to these guys, all 40 at once, and say, we've got this opportunity. Either here's its address or sign this NDA. We'll get you all the information for it. And that kickstarts a lot of conversations with buyers. And what I've realized, which I didn't really think about until this last year, was that your really, really good buyers oftentimes are your really, really good operators. And unless they've got a really robust team put together where they've got somebody doing the operations, somebody doing the acquisitions, it's usually one guy or a group of dudes or gals, that are trying to do both. And they're not actively tracking what's in the market, coming on the market, underwriting all these deals as aggressively as we are. So the simplest and most impactful value add thing that we can do, which doesn't really feel like it's a value add, is just bring these deals to the people who've already said that they want to buy. And of course, the more we can help out on the back end with things like financing, with things like getting them in touch with local inspectors, that's going to help our success rate and their success rate go up when they're trying to buy this thing. And the same is true on the seller side. We track every single park, and we don't have complete data on this by any means, but it's pretty stinking good. We know the park, we know how many spaces it's got, we know the construction, we know who owns it, when they bought it. How big the actual property is, how many parcels it is, and we can use that same buyer's needs list and say, hey, let's cross-reference these two things. Let's find out where the hot matches are, and then let's try to put these deals together, which is it's a very different model than we ran when I was doing national retail, but it seems to be super effective. And I don't really know how other brokers are running their system. I know some guys go for listings, some guys go for buyer rep only. We're still trying to figure out our place in this world, I'd say. Our bread and butter is just to list a park, generate a market for it, get a bunch of demand, and then structure a deal there. I still think that's the best possible way you can ever sell a park ever, because you're giving everybody who would ever have an interest in looking for, searching for, and buying a park an opportunity to see your package. And if it's underwritten appropriately, if you've got something that they can digest and understand, and more importantly, their bank can do the same thing, your success rate goes up. And when we do that, we average anywhere between 5 and 15 offers on a listed park, which again just has a vastly higher success rate than if we're trying to do off-market stuff, or if we're trying to do buyer representation stuff, which we just try to avoid.
Really smart. Yeah, I've spent a little time in the real estate brokerage world, and I couldn't agree more. Honestly, it's the most scalable way to, and I love on Twitter. Landon, we connected on Twitter on X, and I love seeing the debates on there about realtors are useless, realtors don't do anything, and it's actually, yeah, okay, you don't want to pay that 6% commission. You're going to sell your house for 15 or 20% more by paying that 6% commission if you hire a good realtor who's going to market the property well. It's such a mind-numbing, kind of take that I see that is just whatever. Yeah, we've all got different opinions, but that one's just wrong. A good marketing process yields more. The commission is a good investment. It's a no-brainer, really. So love it.
I think so.
I think we're probably want to work towards wrapping up here, but I was curious, have you touched anything in the glamping world, cabin resorts? Have you kind of migrated into the high end of the market there?
As far as specific to glamping, or high end RV?
Well, I guess, yeah, outside of the RV world, glamping, tents, cabins,
tiny homes,
lodging, tiny homes.
There's actually a really, really cool project that we're working on right now. I obviously can't say what it is, but there's an owner who has built a portfolio of, he's got 5 or 6 campgrounds throughout Central Texas. And we just got his financials back on 2 of the properties. And I mean, all I can say is, wow, the dude's printing money. and we're going to be meeting with him on Friday to talk about the actual go-to-market strategy. My hope is that we'll get the listing and we won't have to try to finagle something different or bring a buyer to it. But the guys are printing money. That's a very, very good space to be in. I do think that space, at least in Texas, is under threat by a lot of what we talked about in RV land, which is just that it's overbuilt, because 10 years ago there was not all these campgrounds on the ground in Texas in the same way they are today. I don't know exactly what the numbers are on that, but it's very different.
Yeah.
But you've also got competition from people who just have Airbnbs. I mean, the amount of Airbnbs in Central Texas, hill country right outside of Austin, someone buys 10 acres, literally goes and throws up a tree house, and they put it on Airbnb for $600 a night. You're also competing with those guys.
Yeah.
So a lot of people are feeling the pressure, feeling the burden of that new reality. A lot of people who, especially on the Airbnb side, are getting out of that. They don't want to do it anymore.
Yeah.
And the campground numbers, at least in our instance, they're very strong, but they're nowhere near what they were in the COVID era. But still very, very wildly impressive. I told the guy, I sent him a text earlier in the week. After I looked over his numbers, I said, dude, I wish I'd gone back in time 10 years and just did exactly what you did, because
Yeah.
my life would look a lot different.
Landon, as we wrap up here, I know we haven't really gotten a chance to talk about North Star, where you guys are looking to go. I know you sort of alluded to some larger plans beyond the Texas market as you guys continue to scale the team, but just talk to us a little bit about that, and share some contact information if you'd like, if any listeners want to get in contact and learn more about the Texas market.
Happy to. So North Star Brokerage Advisory, that's the name. Not my idea, it was actually my mom's idea, but the concept of that was something I've been using with my team for about 2 years now, which was, as the team started to grow, I thought, holy crud, this is hard to keep everybody on the same path with the same goal and sharing the same vision. So I said, okay, I got to figure out what that vision is. And that vision is, it was decided at that time, it is today, and it still will be, to build the most dynamic and the most effective brokerage business for RV park and mobile home park owners throughout the country. The more we can get closer to that North Star goal, the better out we're all going to be long term. So this term North Star I was throwing around constantly within the team at my old company, and then as I was kicking the tires on this idea to go out on my own for the reasons that I had, I hated every single name. It was like Dory Real Estate, Dory Parks. I didn't like any of it. I don't want to be the CEO. I want to get away from that role. I want to get away from that notoriety or whatever, or that ego maybe. But then I was talking to my mom on the phone one day, and she says, well, why don't you just use North Star? That's all you're ever talking about anyway. So that's what we are, North Star. The internal, if you look at any of our pitch decks or any of our proposals to our prospective clients, I mean, the general theme of the entire pitch when we're trying to work with somebody is, first off, to define what is your North Star. Is it you want to sell this park in 12 months, you need to sell it ASAP, you're looking for the highest possible price you can get, you're looking for the quickest sale, you're looking for seller finance. First off, let's figure out exactly what that is, and then let's reverse engineer a roadmap that we can do very easily, because we've done 150 plus transactions at this point. Let's reverse engineer a roadmap, design that with you, with your permission, with your blessing, and then we want to go implement that for you. So you're getting exactly what you want, and if you don't, you don't pay. But yeah, the goal is in 5 to 10 years, we want to be as big as the big guys in the space right now. I think it's just a matter of time, effort, money, and scale to get there. And of course, maintaining a good reputation in a market that's this small where everybody knows each other is paramount.
I love that purpose and that story. And then, Landon, if somebody does want to reach out and contact you, how can they get in touch?
Yeah, totally. I'm on X. Obviously, I'm Hunky Dory TX, but I'd say outside of the Twitter space, find me online. Our website's going to have links back to everything. Our website is instarba.com. Very hard to find an available North Star domain, so I had to improvise. But it's the letter N, word star, letters B as in boy, A as in apple.com. You'll find everything you need to about us there.
Love it.
Awesome. Landon, thank you so much. I know, as Matt alluded to, this was a great exercise for us as Northeast and Midwest guys to hear what's kind of happening down south, and yeah, we're gonna have to make our way down there one of these days, Matt. Don't you say? And tour some Texas parks, see what it's like
Do it.
other side of the
Rock on,
market.
man. Yeah. Yeah, come in the wintertime when the weather's nice. If you come in the summer, you'll easily find yourselves in 100 to 110-degree heat, and it's a humid heat. So come on down. If you come through Austin, you can look me up. We'll go find a watering hole or go find something fun to do.
I love it.
Amazing.
One of
Looking
these days
forward
when
to it.
it's negative temps out, we'll take you up on that and make our way down. Landon, thank
Come
you
on,
so
then.
much. We really appreciate it, and thanks again for joining us today.
Thank you guys. Enjoyed it.
Thanks again for listening to another great interview on Outdoor Hospitality Weekly. Hope you'll join us again next week for another great conversation. As always, you can catch all of our episodes on any podcast platform, videos on YouTube, shorts on every social channel we've got. And yeah, if you enjoyed the episode and think somebody would find some value out of it, would love it if you share it with somebody in our industry. Thanks, everyone, and we'll see you back here next week.